One of the most important but often overlooked things in personal finance is having the right bank account for your specific needs. I mean, we all need a bank account, that is obvious, but seeing that some of us need more sophisticated banking while others just need the basics, it is important to know how to choose the right account. And seeing that there are a paralyzing amount of options available on the South African market, it can get quite overwhelming to decide which bank account to choose. And I know it is not the most exciting thing to research, so to save you a lot of trouble, I will go through all the tedious work to give you a quick and easy to follow guide on which bank account you need to take out. So in today's video, I will go through all the different types of bank accounts that are available, which types of products each bank provides, and I will give you 5 important things to consider when deciding on a bank account. So without further ado, let's get into it. Okay, so the first thing to know is that there are 3 different types of bank accounts available in South Africa. The first type is called traditional banks, and these are the ones that we are all very familiar with. These banks have physical brick and mortar structures where you can physically go into the branch and do your banking. Examples of these are the Big 5, namely Absa, Nedbank, FNB, Standard Bank and Capitec. These established banks have been around for many years and are very easy to access as they have multiple branches and branded ATMs located throughout the country. Traditional banks generally provide a broader range of services when compared to its competitors, which include giving access to credit in the form of credit card, loans and overdraft facilities, offering wealth and asset management services, and sometimes even broker or financially advisory services. Many of the big banks also have adapted to offer online banking, but their main business model is still to offer face-to-face customer services. The second type is called online-only banks. These types of banks are relatively new as they only emerged during the dot-com crash in the early 2000s, with many of them seeing a rapid growth during the financial market crash of 2008, where traditional banks kind of messed up really badly. Now, as the name suggests, these banks mainly operate online. There are no branches to visit, so they offer no face-to-face services, but rather provide assistance by means of an app, email or call center. The main advantage of these banks is that they are way cheaper than their traditional counterparts, mainly for the fact that they don't have a lot of overhead costs, seeing that they have no physical buildings to pay for. The main disadvantage of these banks is that they cannot offer the same comprehensive amount of services as traditional banks, as they do not always have the correct licensing in place to do so. Examples of online-only banks include PayPal and Google Wallet. And then we get a third type of bank account, which is called a neobank. These banks were founded in 2008, again because of the financial crisis that traditional banks caused, and these banks are actually becoming increasingly popular and have been growing quite rapidly the past couple of years as the world has been moving more towards a digital era. Neobanks are basically fintech companies that provide apps, software and other technologies to help with mobile and online banking. Neobanks have a rather straightforward business model. They focus on a specific product like a checking or savings account and then target those who do not usually have physical access or the financial means to go to a traditional bank. Examples of neobanks include TimeBank and Bank Zero. Again, these banks are way cheaper due to them being online and not having any physical branches that they need to maintain, and their sign-up process is also much easier and more convenient, as you usually only need to take photos of your documents and scan them in, as opposed to standing in line for hours at the branch and needing to submit physical documents. But because these banks are so simple, they are also quite limited in the types of services that they can offer. For example, these banks generally do not provide any credit and are not able to provide wealth and asset management services like traditional banks do. Neobanks is best suited for young people and lower income users, especially for those who have fewer banking needs and who want to save as much as possible on their banking fees. So when deciding on which bank account you want to use, you need to ask yourself why you want to open a bank account in the first place. Is it just to have something for your salary to be deposited into? Are you going to use it to make transactions to other bank accounts? Do you want to use it to save some extra cash? Would you like to use it to invest in the stock market? Do you need credit or a loan? Do you need insurance products? Or do you want to benefit from some sort of reward program? Think about this for a second and write it down. Alright, so next let's look at the types of products or services that banks provide. Checking accounts are the most common types of accounts. These are very basic. It is an account where you can receive money into and send money from, either locally or internationally. You will usually get a debit card that is linked to your checking account, and this card can be used to swipe at shopping tills or to withdraw cash at ATMs. You can also use a check account to deposit cash at your local bank branch. For most people, a checking account is basically all that they need, hence why new banks are ideal for these types of customers. A savings account looks very similar to a checking account, but it has the added benefit that you will earn a little bit of interest on the amount of money that you keep inside the savings account. This is not much, so don't get your hopes up too much, but it is at least something to help your money grow. These accounts are great to keep part of your emergency fund inside, as they allow you to have instant access to your funds so that it can immediately be used in a crunch. It also has a psychological benefit for those who have spending problems, as if you move your money out of your checking account into your savings account every single month, you will be less likely to make impulsive purchases just for the fact of seeing less money available to spend in your checking account. Fixed deposit accounts are accounts that offer better interest than saving accounts, but they do require you to lock up your money for a longer time, ranging anywhere from 32 days to 5 years. In general, the longer you tie up your money with the bank, the higher the interest rates will be that they offer, because the longer you give your money to the bank, the higher risk you will take on. These accounts work great if you know that you have a certain specific expense in the future that you need to save for example, like a car deposit or your children's school fees, although I won't really recommend using these for longer than a 3-year period, as there are usually better options available elsewhere. And then we get credit. Credit is basically a form of debt where we borrow money from the bank for a certain amount of time and then agree to pay the debt off every single month whilst paying a certain amount of interest. Credit can be in the form of credit cards, overdraft facilities, home loans, car loans, student loans, personal loans, and business loans. Although it is likely that we will all have to take out credit in the form of a loan somewhere in our lives, and that credit can be really powerful when used correctly, these should generally be avoided unless you have good financial discipline and if you truly understand how credit works. I will make many videos on credit and loans in the future, so I won't go into too much detail on today's video, but just know that if you want to buy a car or a house in the future and you won't be able to pay cash, then you will need a bank that can offer credit in the form of a loan. And then some banks also offer other types of services like insurance, asset and wealth management, and rewards programs. These are not necessary for most people and are mostly targeted at those who qualify for premium banking, but it can be really useful to have if you need it. Alright, so now that we have the basics under control, it is time to decide which type of account to choose. So here are 5 important things to consider. Number 1, the nature of transactions. The first step is to look at the list you created earlier to see what exactly are your banking needs. Do you just need a very basic account where you can deposit your salary and make payments from? Do you need a savings account? Or do you want and need all the bells and whistles that a bank account can provide? If most of your transactions are cash, then you need a bank account that is most suited for cash transactions. But if you only prefer to do online payments, then you may come right with just an online bank. Number 2, the value and volume of the transactions. Next, you need to decide the amount of transactions you expect to make, as well as the monetary value of each transaction, meaning how much money you expect to transfer at a time. This is important to know when deciding between a pay-as-you-use account and a bundled option. Bundled options have a fixed monthly account fee and will include a certain amount of free transactions per month, which may be capped to a certain amount of rands, which are all included inside the bundle's price. Pay-as-you-use accounts will mostly have no fixed monthly account fees, but you will need to pay for each and every transaction you make. These work well if you don't use your account that much, but they can actually become much more expensive if you have many transactions, as their out of bundle rates are usually much higher. Number 3, banking costs. This one may sound obvious, but it is really important to be aware of the costs involved with your bank account, as high banking costs can actually hurt you quite badly financially. I have personally been shafted many times in the past by excessive bank fees, and I've learned it way too late, so please don't be oblivious to these costs. The most common fees to look out for are the maintenance fees, the service fees, and the transaction fees. As mentioned earlier, you typically get the choice between a fixed bundle fee or a pay-as-you-use fee. Just remember that a fixed bundle fee does not mean that you get an infinite amount of transactions and only pay one type of fee. If you exceed your free limits, you will have to pay extra, and these out of bundle rates tend to be very expensive. Now, if you don't yet know how many transactions you will make, then start with the pay-as-you-use option and then track your monthly cost for about 3 months. If the banking fees exceed those of the bundled fee, then you can always just switch to the bundled option, usually free of charge. Number 4, rewards. Seeing that the banking industry has become so competitive, most banks now offer some sort of rewards program to attract and retain new customers. These rewards programs will generally reward you for good banking behavior with some cashback or discounts on your purchases with certain merchants. Alternatively, you can also be awarded points that can be converted into cash, or you can use them to buy airtime, to pay your bank account fees, or to buy certain products at a massive discount at participating partners. Let's be honest, we all spend money on food, fuel, utilities, and just products in general. So if you're going to spend your money anyway, then it would make sense to spend it in such a way that you can actually get rewarded. Some reward programs is easier to follow than others, as some require you to perform specific tasks every single month. But if you get into a routine of good banking behavior, these reward programs can actually be massively valuable in the long run. And then the last factor to consider is convenience. No one likes to stand in line of a bank for hours, and no one wants to be put on hold on a call center for hours either. As we are a generation that are focused on speed and instant gratification, banks know that they need to step it up to make things happen quickly and without too much inconvenience. This is why online banks have been so popular lately, and why traditional banks are focusing quite hard to expand towards the online industry as well. Customer services is one of the most important factors for me personally when deciding on a brand, as if I feel like my time is not being respected, then I feel like I'm not being valued as a customer. Another important thing to consider is the availability of ATMs if you are someone who uses a lot of cash. Withdrawing cash at another bank's ATM is generally much more expensive, and it is also no fun to have to drive to the other side of town just to withdraw money from your own bank's ATM. So before deciding on a bank account, drive around in your neighborhood a bit and see which ATMs are most prevalent. Choosing a bank account can be overwhelming, so you will need to evaluate your financial goals and look out for the account that comes with the costs and the rewards that are aligned with your financial needs in order to select the account that gives you the best value possible. South Africa has really done a great job in making banking available to everyone, so there really is no reason not to start banking. Whether you are a boomer who prefer traditional face-to-face interactions or a millennial that prefer doing everything on your cell phone, chances are there is a bank that can accommodate your specific needs. Now, this is the first video in my series where I will take on a laser focus on bank accounts, saving accounts, credit cards, rewards programs, and many more. So if this is something that you are interested in following, then make sure to subscribe. And if you found any value in this video, then I would really appreciate it if you can just leave a like so that this video can be promoted by the YouTube algorithm. That will really help out my channel a lot. Thank you, have a lekker day, and I'll see you in another video next week. Cheers!